Hello from Trend Signal for a review of the data and events the week beginning the 21st of August. Monday morning, markets a little bit mixed down overnight. Currency markets, the dollar pretty much unchanged from Friday's closing levels. The data this week a little bit sparse, really, mostly focused on the central bank gathering in Wyoming towards the end of the week. Markets last week, FTSE sort of really ended up modestly higher, 10 or 15 points higher, but it was the US markets that bore the brunt of the angst in the Trump administration, down 183 on the Dow, S&P down 16. It certainly appears that the administration, the Trump administration, is lurching from one crisis to another. Friday evening, the chief strategist for Trump, or his sort of advisor, Steve Bannon, from the nationalist economic sort of approach that he has adopted with Trump. He was effectively sacked Friday in an attempt to try and stabilize this misfiring administration. So over the last month, I should say, he's lost his press secretary, chief of staff, and his key strategy advisor, which is not good. And the likelihood of any progress on his popular promises to cut corporate and personal tax rates looks very remote indeed. Taxation in the US is incredibly complex anyway. I think the idea that Trump could organize a hike in the debt ceiling to enable such a policy is almost laughable, really. That's it. So there is a lot of reference to the Trump trade fade and asset prices. An article from the FT here that I think Trump would need to convince many key Republicans about the merits of such a policy. And I think with Steve Bannon on the loose now, it is likely that Trump's relationship with the key Republican figures will probably remain fairly antagonistic. Oil markets suffered a good old-fashioned bear squeeze on Friday as traders rushed to cover short positions. I think some traders were expecting data to show strong output growth, but that also coincided with a report citing strong demand in growth. So that rather offset it. Although the oil market does remain actually quite tight, and it has been certainly tighter than it has been all year. And the market for prompt delivery remains higher than the future months, resulting in what's called a backwardation. Traders continue to question whether this situation will persist or whether the level of buying, for example, from the Chinese, which has been a major buyer over the past 8 months as it builds up its strategic reserves, whether they will step back now. So that is of some interest for the oil market. Nevertheless, a significant bounce on Friday. Data this week, well, as I said, it's pretty sparse this week in holiday-thinned markets. The key event, as I mentioned, is this Jackson Hole Symposium in Wyoming. It starts on Thursday, I should say, for 3 days, Thursday, Friday, and Saturday. It's a gathering of the world's central bankers who gather to discuss key issues affecting their own economies and the global economy and what problems they're facing. Central banks continue to be the key, really, to markets. We mention it a lot in our own briefings on a weekly basis. It's not just that they set interest rates, but also they're in the long drawn-out process of removing some of the extreme measures of monetary stimulus left over from the financial crisis. So the main focus this week with the Jackson Hole Symposium is the speech to be made by the European Central Bank's Mario Draghi on Friday. In fact, we got 2 key speeches on Friday. First of all, Janet Yellen will be speaking at 5 p.m. and then in the evening, 8 o'clock in the evening, Mario Draghi will be speaking, and that could possibly cause the euro to rally. Very much depends on the hawkishness of his statement. More likely and disappointing for some is that he delays discussing anything to do with tapering of the Eurozone QE, or at least giving any detail into the next ECB monthly meeting. The other main theme at the central bank gathering will be financial stability. Whilst inflation is benign and falling slightly in Europe and the US, central bankers are concerned about the effects of ultra-low interest rates on borrowing habits. The effect of a sudden increase in rates will be dramatic on a generation of borrowers who've really only ever known these record low interest rates, and for some, they've never experienced an increase in rates at all. So that's the dilemma for all these central banks. Low inflation is really preventing a rise in rates, and in fact, inflation that is falling slightly, as I said, whilst financial stability, of course, is threatened if low rates persist unchecked. So these results in these bubbles. We know about the bubbles in bonds and equities, but also in property, and also the dreaded cryptocurrencies exist. So that could spell trouble if there were a surprise rise in rates. Okay, other data this week. Let's go back to Tuesday. We've got the ZEW economic sentiment indicator, survey of institutional investors, expected to dip slightly from the previous month. I suspect a stronger euro taking its toll. We also have the manufacturing and services PMI data out on Wednesday in the Eurozone. Later on Wednesday, we also have, in fact, Mario Draghi is speaking early on Wednesday at a university in Germany. I'm not sure that will be that relevant, but it's been highlighted here. And then we have the regular weekly crude oil inventories, having just discussed crude oil and its sharp bear squeeze bounce Friday. Interesting to see what effect that has on the markets. On Thursday, we have the second reading of the UK's gross domestic product. The second reading is expected to come in the same as the first, plus 0.3%. And as mentioned, it's the start of the Jackson Hole Symposium, lasting 3 days. That's pretty much it. In fact, there is one last number that might attract a bit of interest, is the durable goods orders on Friday in the US out at 1:30, expecting a pickup of plus 0.4%. It's the core durable goods order that we need to focus on, plus 0.4%. That's it. Thank you very much for listening, and bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.